Hello, Assalamu alaikum. Today we are going to discuss June 2020 AS paper 22. We did two questions yesterday, inshallah. We will continue the other two questions today, inshallah. So here is your paper, and we have to move to question number 3 and 4. We did 1 and 2. Now, question number 2, we did it last time, yesterday. And now question number. Zoo and Zoo have been in partnership for a number of years, decided to resolve their partnership infrastructure. 2019. Now, reasons for resolution. Possibility. What are the reasons for resolution? Possibility of disagreement. Business become illegal in the country. Or business become bankrupt. Partner retired or died. There are so many reasons. Now, come to this. This is the last balance sheet of Zoo and Zoo, signifies 1st October 2019. Now, what you are required to make following information is also available. Required is your realization account. Oh. So when you are making realization account, first of all, what you have to do, you have to write all your assets and liabilities over here because all assets and liabilities are going. So the rule is credit assets, debit realization. Debit liabilities and credit realization account. Simple. Debit and credit. So our first asset is motor vehicles. Motor vehicles credit, realization debit, 19,000. Done. Furniture and equipment. $11,900. Then inventory credit, realization account debit, 7,480. Then trade receivables. How much? Trade receivables, 11,200. And your trade payables. Your liability is going to be debited and realization account is going to be credited. The trade payable is how much? 5,400. 5,000. Now, all liabilities and assets are bound into realization. Now, how they are realized, we have to now consider. Zoo took the motor vehicle at an agreed value of 15,500. So, this we have to deduct from Zoo capital. Zoo capital. And the reason, the amount is 15,100 agreed. Agreed value, 15,000. Now, he has taken away one of the account of a credit customer rate will be written off as irregular. The account of remaining trades will settle in full unless 5% cash discount. Okay. Now, in this case, what will happen? Our total account receivable is 11,200, minus which 800 is bad debts and 95% is recovered, 9,880. So what we are going to write here over here. So bank debit, realization, credit, 9,880. Now this is the reason is bank for trade receivable. Getting my point? 9,880 done. Okay. Other assets were sold for cash, furniture, equipment 7,300. Okay. So again we'll write over here bank. But this amount we have collected for furniture and equipment 7,300. Furniture and equipment 7,300. Done. Okay. Then inventory. So bank debit, inventory credit, bank debit realization because inventory is now in realization. So again we'll write over here bank for inventory. How much we have collected? 6,530. 6,530. Done. Okay. Now accounts payable were settled in full, less a 5% cash discount. So what we have done, accounts payable is how much? Trade payables was 5,400 multiply by 95%. So we have to pay 5,130. So bank credit, realization, debit, bank with reason. This is the trade payables. How much? 5,130. The cost of dissolution 620 were paid by check. So bank credit, realization debit, 620. 620. Again, reason is bank, but liquidation cost. Getting my point here, this is a double entry system for realization account. Now what we have to do? What we have to do here is we have to take totals over here. Please be careful. We are, this is a temporary total. Getting my point here? Just to know what's happening. Okay. Now, see, debit side 19,400 plus 11,900 plus 7,480 plus 11,200 plus 5,130 plus 620. Answer is 55,730. 55,730. Okay, now see the credit side 5,400 plus 15,100 plus 9,880 plus 7,300 plus 6,530. This is 44,210. Our credit side is lighter than our debit side. It means the realization is sustaining loss. How? We have to credit realization and we have to debit capital of the liquidating partners. It means when we are debiting any partners account, means we have suffered or we have sustained loss in realization. So how much is the loss in realization? 11,520 is the total loss here. So what we will do, we'll divide that loss between the partners. Now see the class, they do not have a formal agreement on sharing profit and losses. It means we have to divide the loss between them equally. So the loss is how much was the loss? 11,520 divided by 2. So 5,760 loss is suffered by each partner. So what we do, right over here, is the first partner. So 5,760. 5,760. And Zoe capital. 5,000. 5,760. Then what we write over here? We delete this. Delete this. This. And we will delete this. And we will delete this. That was 5,000. After right, so this is that, and we secured 7 minutes. Move to the calculate the amount due to or from zoo as a result of resolution. Now, we have to calculate for zoo also. So what we'll do, uh, capital before liquidation, before liquidation. That was the amount. Capital was 18,000. Okay, then now current account. Current account is negative, means showing a debit balance. It means it's going to be deducted over here 2,000, 2,480. Done. Okay. Then loan. He has given a loan to the business. 4,300. Loan 4,000. Then, oh, he has taken away motor vehicles. Motor vehicles. 1,100. Okay. It's going to be deducted. Then, loss on realization. Loss on realization. That was 5,760. 5,760. Now, amount due. Amount due. How much? Amount due. 14,000 minus 2,480 plus 4,300 minus 15,100 minus 5,760. 1,040. Amount due from, because the answer is coming in negative, so he has to pay 1,040 because of his all account balance. Okay. Now come to question number 4. That was the end of question number 3. Now come to question number 4. Okay. DL Limited will soon be introducing a system of budgetary control. Directors are aware that this should provide a number of advantages. However, they are not sure how budgetary control will affect the company's departmental managers. Explain 3 ways in which the introduction of a system will affect the departmental managers whenever you make a budget. You have started budget. First and most important thing is your setting your targets. Then you can control. then you can evaluate performance. But budget can serve, or budget can be a stressful constraint on the managers, what they think like this. Okay. So what we shall move further. Uh, DL Limited manufactures single product, one of its factories. The following inputs available but above 1 year. Selling price 69, direct materials 2 kilo at $3.3, direct labor 5.2 at $8.3 per hour. Other variable cost 2.4. The fixed factory costs are 8,374. The factory has the capacity to make 28,000 units per annum in normal working condition. Okay, this is the capacity. Okay, now what we have to do? Calculate a contribution per unit. Oh, very easy. Now selling price $69. Less variable costs. Okay. Variable cost, raw materials, raw materials. Raw material cost is how much? Okay, 2 kilograms multiplied by $3.3, $3.30. The answer would be 2 multiplied by 3.3. Answer is $6.6. 6.6. Then labor. Labor. Direct labor is 5.2 hours multiplied by $8.3 per hour. $8.3. The answer would be multiplied by 8.3. Answer is 43.16. 43.16. Yep. Next is direct materials, direct labor, other variables. Other variables. Other variables. Other variables 2.24. 2.24. Acha, for every unit. So what we have to do, we have to write it over here. 2.24. All together we get total variable costs. How much? 6.6 plus 43.6 plus 2.24. Answer is 52. Total variable cost. Answer is 52. So contribution minus 69, $70. Contribution. Okay, done. We got 3 marks. Okay. Now what we have to do, calculate how much the target profit was not achieved for the year ended 31st December. The annual target profit for this factory is $50,000. During the year ended 31st December 2018, 24,500 units were made and sold, and the target profit was not achieved. अच्छा जी, तो $50,000 हम profit नहीं कमा सकते. Okay, so what we have to do now? Okay, now contribution 24,500 units multiplied by 17 is equal to how much? 24,500. 416,500. $500. Okay. Now less fixed cost. Fixed cost is how much? Fixed cost is given 3,74,000. Yes. Then, so the answer would be minus 3,74,000. Answer is 42,500. Answer is 42,500 is the actual profit. Actual. Now, target profit. So profit not achieved. Profit not achieved is 7,500. 7,500 profit not achieved. Profit. Got it? Done. Now, the directors are considering two options to increase demand for the product out of the current level of 24,500. The current factory capacity of 28,000 units could increase by a maximum of 20% by the use of overtime. Overtime will pay at 1.25 times the basic value. Reduce the selling price of the product by $3. Demand will increase by 40% on 2019 levels. Okay, suppliers of material will provide an additional discount of 5%. Fixed cost will not be affected. Option 1. So, okay. What we have to do with option 1? Option A. Calculate the annual profit if the directors choose option A. Okay. Now, what will happen in option A? Selling price. No. Selling price would be decreased by $3. So 69 was the selling price, and it is decreased to $66. $66. Okay. Now less variable cost. Variable cost, materials. Material cost is decreased by supplier get an additional discount of 5%. Now, at this time we are buying materials for which price? Materials were bought for 3.3. 3.3 multiplied by 95%. This will happen. Provide additional discount of 5%. So what we need 6.6 multiplied by 95%. 6.27. So material price would be 6.67. 6.67. 6.27. What about labor? Labor would be paid same rate, and what we have to do then, we have to add overtime. That was previously 43.16. It will remain same. We'll calculate overtime later. 43.16. Other variables. 2.24. So total cost would be, variable cost would be 6.27 plus 43.16 and 2.24. 6.27 plus 6 plus the answer is 51.67. 51.67. 51.67. Your contribution minus 66. 14.33 is the contribution. 14.33 is the contribution in option A. Okay. But here one thing, uh, maximum capacity would be 28,000 multiplied by 120%. So it would be 8,000 multiplied by 120%. 33,600. Are you getting my point here? 33,600. And if they want to improve 40% of 2019, 24,500 multiplied by 140%. That is 34,300. Not possible. Maximum capacity is 33,600. Now, when you are producing additional units for 33,600, you are paying for the overtime because we have pay overtime, and we are opting for A option. So, what we have to do, we have to calculate overtime. Okay. So, how to calculate overtime? See, now contribution for 33,600 units multiplied by 14.33. The answer would be 33,600 multiplied by 14.33. Answer would be 481,488. 481,488. Done? Okay. This could be the possible capacity, and on this 140% is not possible. Of 2019 level is not possible. So we can maximum make 33,600. Contribution, according to contribution, we can earn 481,000 on 33,600 units. Okay. Now less overtime. We have to pay overtime. Now overtime is calculated how labor is going to work for. We have to pay for 33,600 multiplied by. The labor is working for labor was working for 8.3 per hour. 8.3 per hour multiplied by 0.25. Because overtime is paid 125%. So 33,600 multiplied by 8.3 multiplied by 0.25. The answer is now what we have to do here. Overtime not for all the hours, but for additional units. So additional unit 33,600 minus 28,000, 5,600. 5,600 multiplied by how many hours? 5.2 hours. 5.2 multiplied by 8.3 multiplied by 1. Multiply by 5.2 multiply by 8.3 multiply by 0.25. Overtime is 60,000. 60,000. 424. Yes. 60,000. We have to pay for this. And less fixed cost. fixed cost. Fixed cost is 3,74,000. 3,74,000. Answer would be 488 minus 60,044 minus 3,74,000. Answer is 47,064. Is 47,064. Now, still, after adopting option, we are far behind 50,000. How much? $2,936. We are still apart of 50,000. Getting my point clear? Or any problems? We are still how much? Uh, 47,064 is the profit minus 50,000. $936. We are far apart. If we are supposed to make a profit of 50,000, we are that much apart. Are you getting my point? Okay. This is the profit. This is the, and if you see, uh, if you see the previous profit was how much? 42,500 minus 47,064. Answer is 4,564. Actual profit which we had earned, we are 4,564 ahead. But if we keep target profit 50,000, we are almost how much? 50,000 minus 47,064, 2,936, still away from our target profit of 50,000. Okay. And 4,000 we are from our real profit. Okay, almost. Now, option B. Borrow 20,000 at an interest rate of 8% per annum to finance improvements to machinery. Machinery will depreciate by 20% per annum. Cost of material will be reduced $3 per kg. Reduced to $3. Advertisement campaign will be launched at a cost of 5,000 per month. Factory will operate at full capacity without a need for overtime working. Selling price per unit will remain unchanged. Now, what we have to do? We have to calculate profit for option B. Now, selling price will remain unchanged, $69. Okay. Now, less variable cost. Variable cost. Okay. What about materials? Materials cost will be $6 because it is reduced to $3 per kilo and we use 2 kilo. So $6.00. Okay, labor cost would remain same, 43.16. 43.16. Done. Okay. Other variables 2.24. Other variables 2.24. So total variable cost would be how much? 6 plus 43.16 plus 2.24. Answer is 51.4. And contribution minus 69, $17.6. $17.6 contribution. Done. It will remain same. Now contribution is would be increased to 17.6. Okay. We don't need to pay overtime. So there will be no calculation for overtime. It's gone. Okay. Now see what is left. Okay. Uh, we have to. The factory will operate at full capacity for $28,000. Okay. Now contribution would be 28,000 units multiplied by 17.6. $17.6. The answer would be 17.6 multiplied by $28,000. 4,98,2,000. 4,92,000. This is the total contribution. Okay. Now, less fixed costs. Fixed cost हमारे पास है. Now fixed cost will increase. Right? Fixed cost is increased. That is 374,000. That is a fixed cost. Now, what if we have to going to add in fixed cost? Depreciation. Increased depreciation. How much is the amount of increased depreciation? Increased depreciation is how much? 20%. So 20% of depreciation, 20%. 20,000 multiplied by 20%. 4,000 is depreciation. 4,000 depreciation. Okay, interest expense. Interest on 20,000 borrowing multiplied by 8%, that will be 1,600. 1,600. Done. Now, what is left? Okay. Advertising campaign. Okay. Advertising cost was how much? 5,000. 5,000 into per month means 60,000. Done. So total fixed cost would be how much? That is going to increase this. 374 plus 4,000. 374,000 plus 4,000 plus 1,600 plus 60,000. Answer is 439,600. 439,600. So if you deduct from 492,800, 53,000 is the profit. 53,200. So we are ahead of our targeted profit. So I think option B would be a better option. Okay. So this is all for today. Inshallah, see you tomorrow. Tomorrow we'll start with our A2 paper for June 2020. Inshallah, paper 32, and we'll do it in three recordings, because whenever I try to do the question all at once, it makes a very large video. So I've decided to make it on three equal installments, 2 questions per recording, and that will also save my time. Okay, so inshallah, see you. Subscribe my channel. You are welcome for any suggestions. Thank you. Take care. Allah Hafiz.